And good afternoon. Thank you for joining us here on this Monday, March 7th. This is Market Talk. Thanks for being part of the show today, making us part of your day. I'm your host, Jesse Allen. Thanks for joining us again. Find us online, markettalkag.com. That's our home on the web. Markettalkag.com is where you can find us. All of our social media links, all of our streaming sources, the latest news of agriculture, much more. It's all online at markettalkag.com. Well, another volatile day to start the week here in the market trade. A lot of volatility, a lot of fear in these markets going on still. A lot of things to keep our eyes on. We're going to talk about plenty of it. Let's bring in our good buddy John Heinberg with Total Farm Marketing joining us here on this Monday. John, great to have you on. And another day of a lot going on in these markets that maybe for some people a little unprecedented, maybe for others just kind of watching and just kind of shake their head and keep going. Really, though, saw wheat again, the leader today. I wouldn't say really surprised there, just with everything going on still in Ukraine.
Yeah, obviously that's where we're at. And then you had the CME come over the weekend here and readjust the trading limits and move wheat to an 85-cent limit for both KC and Chicago for the day, which we did see that May contract lock limit out right on the open last night. So that brings us to an expanded limit of $1.30 tomorrow. It still looked like there was plenty of energy trying to buy this May wheat contract here, even at 85 cents higher. So let's put that piece into the puzzle for tomorrow and then throw a USDA report in on Wednesday. It's going to be real interesting to see how this market wants to trade out and where the strength flows. Obviously the Ukraine situation, as horrible as it is, it's really causing this market to really look at where the wheat supplies could be globally. And right now, we're probably trying to price in a major reduction, if not a total non-crop coming out of the Ukraine here this spring. So again, uncharted territory, looking at all-time highs on multiple commodities across multiple boards. It's just really an unprecedented time right now. Then you throw in the inflation factor and what's going on in the money flow. That just puts more fuel to the powder keg that we're dealing with right now.
John, I want to talk about this. I find this very interesting. We've started to see it happen over the weekend and here today. You mentioned that May contract a lot in Chicago wheat, but we're seeing this in a lot of contracts in the grains. A lot of cash bids getting rolled to deferred contracts. I know that May wheat contract, Chicago, you mentioned one. A lot of speculators caught in short positions there. But talk about this for the farmer who's looking at their marketing and maybe they're going to their elevator and seeing that, oh, well, the cash bid is based off the July contract or whatever the case may be. Talk about why this is going on, what you're seeing there, and maybe explain a little better for folks.
Well, you're looking at obviously a product of where the money flow is, and sometimes what prices are on the board are not reflective of where we may be on the supply side, just because of the amount of money and the computers that are pushing this market where it needs to go. And you're looking at some of these end users looking at this price and basically saying, I can't make this work here, or I've got enough supplies to get me through. Obviously, their business trying to meet their back end as well. And with that happening, they do take advantage of situations and look to roll things to a different month so they can widen the basis out. That was one of the things I was telling my producers here too, is just keep an eye on your cash market. The futures market is going to trade where it wants to trade. Is it reflective of where we are on supplies? Obviously, if the Ukraine situation was going on right now, or wasn't going on right now, we wouldn't be sitting at 750 on the May board for corn. We'd probably be a solid dollar under, just given the demand and the supply picture that we had. But that's obviously brought that extra flow of money into the market, and we're seeing that continue to trickle out. So, again, looking at the end user and how they're handling things, I wasn't surprised when we see those things move. The lovely term of force majeure comes into play in terms of unforeseen circumstances that they can move things around, unfortunately at the producer's expense. And we may be seeing some of those things starting to happen. I've been just telling my producers too, make sure you're talking with your elevator, make sure they're okay on the financial side of things. They're taking opposite positions in these markets and they're getting hit as well on some of these margin calls and things along those lines. And those put a lot of pressure on those businesses and make sure some of those contracts are still going to be valid. Make sure that just have those communications. Don't be sitting back just saying, hey, I got a great price going here, but make sure things are still working, because you don't want to get caught on some of the fine print that nobody ever reads.
Well, John, quart of beans in the overnight trade, we were up sharply with wheat. And then as we got in the day session, we started to kind of back off, saw a little bit of spread trading, maybe those front month contracts in both quart of beans ended, a little lower, whereas the deferred months saw some decent strength. So maybe starting with the corn market first, what did you see there today? What are your thoughts after Monday's action?
To me, that was about the spreads, at least during the course of the day today. We saw weakness all the way into the July contract, good strength in the deferred. Been looking at like that July December spread that pushed over $1 on Friday. Started seeing some profit taking that at the end of the week. Even the trade between spreads, the May to July spread is really kind of stretching out. We're starting to see some of those profits starting to square up a little bit in that regard and narrow those spreads up. Because the supply picture, even though we're getting a heavy premium in the front end, is still going to stay tight into the back end. So that was really what it would look like to me in the corn market was some of the spread trading. Now moving over into beans, we started more bull spread today. And again, continuing to see China news on the purchase side of old crop beans as well as new crop, and then the spreads kind of kicked in towards the end of the day as we saw that strength stay in those deferreds, and we saw that weakness kind of drift in. Again, that's just how they balance the profits, balance the market out a little bit here when things get overstated. Maybe that's a little bit of concern, going into these expanded limits now with wheat and taking some risk off there. Plus, again, that USDA report this week that we're still kind of keeping an eye on as we're trying to figure out what the numbers could possibly be.
On that USDA report this week. I know we were talking a bit about this a little bit while we were waiting to go on air today. We look at South America, Brazil, Argentina received some favorable rain over the weekend, but uh, outside of a little more on the way this week, the forecast turns drier in the second half of March there. And we look at that USDA report, and I'm under the thought that if we see any change, it might be on South American numbers or the demand side with all the China buying of beans. But I mean, what are you seeing? Do you agree with that? Are you seeing anything else we could maybe get out of this USDA report on Wednesday?
This is purely going to be a line item adjustment in terms of where we are in the U.S. table, no production or changes, or anything of that nature coming into play. Obviously, we save all that for the May report when we get the new acre number, and that's when we start getting those first numbers for 2022-23. So, biggest thing we'll see will be some possible demand adjustments. That's what the market is anticipating. We'll see if those come into play here. Maybe we'll see corn carryover come down 50, 60, 70 million bushels on some demand increases. Maybe beans come down about 40 to 50 million bushels on some demand increases. We've seen China as well as other importers step into the old crop market here because of that tight South American supply. So it wouldn't shock me. We see some adjustments on that window. Corn's still a little more up in the air just because of where we are in the table. But again, we had a good week of export shipments for both corn and beans again this week. Sales have continued to be fairly strong, and corn sales are starting to pick up a little bit more in here, even with the price move. So that'll be probably all we'll get on the U.S. side. It'll be possibly just some line item adjustments on the demand. I think a big factor is going to be what does the USDA do with that Brazilian soybean crop? We got private analysts bringing that number down to 125. I saw 122 today from another private analyst. USDA still at 134 million metric tons. So we got some room for that to come down as expectations are for maybe down to under sub 130 is what the analysts are putting together. So we'll see if the USDA continues to make those cuts. Given what we've seen and at least the talk out of that region, there's still some room for that to go downside. Then obviously what happens in terms of corn and as well as the soybean crop in Argentina. Right now we're probably looking at maybe the tightest supply globally of soybeans in about 8 years here, with good demand in a market that's looking for product. And that's some of the reason we're seeing prices stay where they are and the demand stay where it is, even though these prices are pretty, historically high.
Soybean oil was strong today. I'd have to think that was maybe on the back of crude oil. We touched 130 overnight. We backed off it. We're still around that 118, 120 range here this afternoon. I've seen plenty of reports from energy analysts saying 150, 160. I even saw a report of $200 a barrel possibly today from Fox Business News. When you look at this crude oil market, we know how it ties into the grains and everything else. I mean, with all the situation going on with Russia, Ukraine, the talk of banning Russian oil imports, what do you make of this crude oil market and its relationship to everything as we go into this week?
That's still a bit of a driver in the commodity sector. We saw that really strong open on the crude last night. I think that was what fueled the open and all the grains across the board. And then this morning, when crude kind of started rolling over a little bit, then you saw the grain market come down with it. It does have that straight tie right to that soybean oil, which has been so key in that soybean market for over a year now. But then there's also still the other factor involved in this market is that sunflower oil was a major export out of those Ukraine ports. So we continue to see strength in the edible oil market. Palm oil again surging to new all-time highs today. So we got an oil product that wants to get used for the food side as well as the industrial side in terms of biodiesel. And that's probably maybe the biggest legs underneath the bean rally is just the fact that these crushers are looking for product and crush for oil versus meal that we've seen in the past. So again, you watch how beans kind of traded today. It kind of traded away the oil market went around. We were strong early, faded midday, finished the day fairly firm, and that kind of brought those prices off those lows. Even though we're still a little bit mixed on the day overall. But again, crude oil is definitely a push in this market in terms of the ethanol industry for corn, maybe more even on the DDG side for feed coming out of that ethanol industry, and then that tie to that soybean oil market. And again, you can still kind of put those two charts over top each other. When crude oil moves, soybean oil seems to follow step, coming back into those soybeans as well.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. As we move over to the livestock sector, good day in cattle today. Let's talk about what you are seeing there. And I would say cattle, some of that strength tied to corn being a little weaker the front months. But I know you're seeing some other things in this cattle market too that look good here today, John.
Overall, this pullback that we had seemed to get a little overdone on Friday with that hard washout. And, it was nice to see prices kind of reject those lows, so we got a nice bounce back, triple digit gains in both crop, but lives and feeders, maybe just some calmness in the corn market. Not that we were higher or lower, just at least it felt like a steadier day today. Maybe that gave a little bit more energy into those feeders to get those strong returns. There are a couple things we're still keeping an eye on. First off, April cattle. Now we're getting closer to the end of its contract life. It was trading under cash, so then we needed to pull that up a little bit in that regard since it's a spot month. The biggest thing we're really watching is what happens with the retail values. They've been on the slide as we're concerned about demand destruction here. Obviously we got inflation across the countryside. You got energy prices pushing higher, and this market may be building some concern in that the consumer, when they get to the grocery store, looks at the cost of pork, looks at the cost of poultry versus beef, and is making that choice. So I think that's been something weighing on this market overall. Still, again, longer term fundamentals are friendly, and there's still think there's some support in this market. Not sure if this is our pullback for the spring/summer. It might be just our pullback here, at least through the winter months after our winter high. But I still like those longer term views, especially when we got October down under that 140 level here last week. Looked like some pretty good value, and I think we saw some value buying step into both of those markets here today.
Hog market had a real rough day on Friday. We come back in here Monday. It really wasn't a great day here. Some of those later month contracts for the year were down triple digits. We were down moderately in the front months. This hog market just, I don't know. I just don't get a great feeling. It's not looking too great here right now in the short term.
Yeah, the technical side of the picture really kind of fell apart here over the last handful of days. And we saw that sharp break off the highs. Then we consolidated for 3-4 days, built what we call a bear flag into that market. If you look at it, we had a series on that April contract, a series of higher highs, then higher lows. Saw that break apart again on Friday with that gap lower. So again, the technical sellers came in. We held support at the 40-day moving average today around that 98 level, supported probably by that firmness in the retail carcass levels, at least at midday today. So we'll see how they close. We were softer last week on those retail values but historically we're still high. Cash market was unreported there due to confidentiality, so that didn't help the market at all, even though that's been trending nicely higher overall. So we'll have to watch that cash trade trend. So to me, this is a little bit more about money flow than even the fundamentals here, because the fundamentals are still supportive in this market, but it was just a window we need to take some more air out. Now you kind of follow some retracement levels. Probably got another couple bucks down. We'll have some pretty good support, maybe around 96 at the 50-day moving average. That'll have to be an area we can hold, but now we got the index and the April hogs pretty much trading step for step, about a buck between the two. So that might be a little bit of a supporting factor. Watching those summer months, Again, same type of window. Do we get a little bit more downside here? I'd like to see them stay positive today. We had a chance to do that for a while. It just looks like we're in one of those windows where, despite the news, the money flow wants to take this hog market a little bit lower, at least through these next few weeks.
John, how about that dairy market? Seeing a little bit of green on the screen there today in milk and butter. What are you seeing over on the dairy side?
Nice move in the class 3 milk again. April contract, new contract highs today, and that's carrying out also into those deferred months. So, good move in cheese prices back above $2 again for blocks and barrels. Butter also firmer again today. So we're seeing good product pricing in that window. And that again is just providing some underlying support in this market. The demand is good here internationally as well as domestically. And now we're in $24 milk window. We're back to some multi-year highs. So we'll see how far we can push that out if it decides to, or we get to a bit of a near of a top. We got a lot of commodity markets talking all-time highs or breaks to all-time highs or challenging all-time highs. And it feels like the milk market's just got a little bit of money underneath of it here to maybe possibly make that move as well. Again, producers, great value out there to make sure you're finding some way to protect yourself, but keep that flexibility in because these markets are being very, very well supported. But again, we're still one headline away from things rolling over and money flowing out very, very quickly. And again, that might be counteractive to what we see in the fundamentals.
Well, John, great stuff as always. Any final thoughts you have for us on this Monday?
The times are different. Volatility is high. We've been talking amongst ourselves here in the office. It's basically a pretty wild roller coaster ride. So stay focused on what's in front of you. You focus on the cash market as a producer. Find a way to shift some risk off. Again, I said this last week. I know it's costly to look at some of those strategies, but the cost of doing something may outweigh by far the cost of doing nothing and the impact that could have in your bottom line if all of a sudden the prices decide to roll over and take profits off the table extremely quickly.
It's almost like these markets are a Wild West movie here in 2022. John, if folks need a little advice, a little help with their marketing plan, I know they could reach out to you and the team there at Total Farm Marketing. What's the best way to do that?
Sure, love chat with them anytime. Give me a call, 800-334-9779, or shoot me an email at jonh@totalfarmmarketing.com. Again, we got our website, totalfarmmarketing.com. Some webinars getting put together. I know we got one for the USDA report this week. Those are free to producers just to fill out some information and sign yourself up.
John, appreciate the time as always, sir. Have a great rest of your week, and we'll talk to you next week.
Sounds great, Jesse. Have a good week, everyone.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.